Hey guys, welcome back to the channel. TGIF, baby. Come here, Jax. Let's make an appearance. Come on. Come here. Come here. Let me see you. Let me see you. Sorry about that. All right, guys. Looking forward to the show tonight. So tonight, last night we had a daily factor show. Daily factors where we drill down on one sector of the high yield ecosystem. Last night we did the closed-end fund Thursday night show. Now, closed-end funds are can be high yield and can pay monthly and can be just like option-based funds. Some say even better. You just depends on what you're looking for. We got Bond in the house and we got Dividend Degenerate. Thank you so much for being here, guys. Appreciate you guys. Now, remember, this is not financial advice. Consult a licensed planner with all your financial planning needs. All right, so that's going to go away in a second. Let's share the screen. We'll go see what Bitcoin's doing while we wait for other people to get here, see if it's moving. Sometimes they do move it on weekends. Sometimes it moves quite a bit on weekends. So let's see what in the heck is going on. Sorry, there was no afternoon live stream today. Jax and I went, it's just too pretty of a day. It's like spring is here in Austin. I mean, it was probably 85 degrees or something. I mean, I'm not exaggerating, maybe a little bit, maybe 82 degrees. It was gorgeous today. Anyway, Jax and I went on a good long run / walk. I mean, we did a little of both, but anyway, worked up a good sweat, got all good and in shape. All right. And we had a good time. I've been working on videos and stuff this week, and I've missed a couple of walks with Jack. So we had a good one today. All right. Well, Bitcoin. What is Bitcoin doing? Let's see. Doesn't trade in the CME doesn't trade Bitcoin futures. That which is, or do they? Which is derelict. I mean, they ought to be ashamed of themselves. No, it looks like they're. Are they trading or not? Anyway, but I know that CME futures don't trade over. They need to. There needs to be 24/7. Let's just look at Coinbase. All right. So the price on Coinbase is 65,871. Bitcoin futures, as far as the mercantile exchange, is 65,755. Yeah, it looks like they stopped trading at 7 o'clock. Well, anyway, it's unfortunate. Those need to be 24/7. All right. Well, so not much going on. All right. Let's talk about the daily factor. So tonight is gold and silver Friday night. All right. Okay. So let's get out our gold and silver graphic. So it's going to be a quick one tonight. We don't have that many contestants here, but let's meet our contestants and see what we have. All right. We always start with the high yield. Oftentimes it's the worst fund. We'll see if that's the case. I mean, it's the worst fund as far as NAV return, certainly, but sometimes total return as well. Not always. Anyway, the high yielder tonight is GLDY from Defiance. Now, this thing is based on GLD. They do just like Defiance always does. They sell synthetic covered call spreads on the GLD. You get partial participation in the upside, especially if it goes above the strike of the spread, the bot option. But you get a yield, and they just generally pay all the yield to you that you get, whether the fund makes money or not. So it's a max yield thing, similar to yield max. Anyway, it works well in a bullish market, sometimes not so well in a bearish market. Anyway, GLDY. Well, this thing's gone from, I mean, the past 90 days it snaps flat. Now, of course, it has the highest yield of the bunch, and so it also has the worst NAV. That's just the way the math works. A high yield is a tax on the future upside of the asset, in case you haven't heard me say it before. All right, SLVO is yielding about 31%. Now this thing's NAV has gone from 98 to like 100.5 or something. It's up $2.50, about a little bit less than 2.5%. But it has a little bit less yield too. So anyway, then we have GLDI. Now this thing has gone from 173 this quarter to 182. So it does have some upward price trajectory, and it is yielding 5%. I'm sorry, it's the NAV's up 5%, not even including the yield. The yield's 17. So anyway, now our next one is the first one based on silver. SLJY. It looks like I'm missing another. I'm missing K Gold and K Silver. Jiminy criminy. Anyway, sorry about that. Gosh darn it. How could I be so stupid? I mean, it happens every freaking time, but let's just go get, we can't do it without K-Silv. Let's just go get K-Silv. We'll get K-Silv out of the bullpen and throw him into the lineup. So, all right. We'll at least be able to see the numbers. It won't be part of the graphic, but we'll at least be able to see the numbers and see how K-Silv would have done. All right, so back to the graphic. All right, SLJY yielding 14%. The NAV has been on a tear. This is based on silver miners, not only silver miners, junior silver miners. Like I always say, so this is your mom and pop silver mine as opposed to your big corporate silver mine. In any event, whatever the case may be, investments in this area the past quarter have been great. The NAV on this thing is up 40% and the yield is 14%. That's pretty dang good. Next, we have WYGold. WYGold's NAV has gone from 43 to 52. That's a 20% return on NAV alone for the quarter. Then we have IAUI, kind of a good compromise here. The NAV's not quite as hot. Yield's not quite as hot, but we'll see. This one could be a good compromise. It's from Neos, yielding 10.8. And the NAV is still up a very respectable 15%, but the tax is a little bit lower here than on some of the other ones. And then we have K Gold yielding 8.3. The NAV is up on the quarter. The NAV has gone from 22 to 37, which is obscene. That's insane, obscene, whatever you want to call it. So now let's go look at K-Silv. Now K-Silv's price has gone from 29 to 45 this quarter. And that does not include dividends. So that's a 16% face ripper. Or no, it's paid a 16% yield. And I'm sorry, and that's a 54% face ripper as far as that goes. So let's let me just make a little adjustment here. It's just not cooperating. Anyway, we'll be able to see if K-Silv would have won. All right, so let's go back to the thing. All right, well, let's look at the most stable out of these. We're going to run the stable dex, which just compares the stability of these assets over the past quarter, just as far as price goes, with the stability of the SPY over the same time frame. So the SPY is the surrogate for the broader market. So a stable dex of 1.02 means it has market stability. So GLDI, at least according to this metric, has market stability and is paying a 17% yield. It's pretty dang good, but it paid for it in the NAV. You can see it's almost, like I always say, an asset can be too stable. I mean, in a runaway bull market, you want volatility. The volatilities creates alpha for you, but so in any case, these guys don't do quite as well on NAV, but they do a lot better on stability. So that would totally make sense. That would totally make sense. I believe this one is from UBS. And you can see it's stable in the right direction, but it just doesn't, it's been trading between, 170 and 182, which isn't very volatile for an asset like this. All right. So let's get back here. So our other stability people are IAUI, and this shouldn't surprise us. It's from Neos. Neos is, at least their brand is conscious about trying not to overpay, or at least not giving the appearance of overpaying. Still, though, out of the rest of them, this is actually the least stable. It's only about half as stable as the overall market. But in any event, it's well, and then we have the least stable one is SLJI, the junior silver miners. But the rest of them, so we have GLDI as an outlier as far as being super stable. SLJI is an outlier on the other end. Y-Gold's just every bit as unstable, and pretty much Silvo too. But these ones in the middle right here, these two, IAUI and GLDI, have better stability than the rest of the bunch. And GLDY is yielding 45%. Now, unfortunately, it's not. Its NAV is flat, which is not ideal. In any event, let's look at. Let's just go look at the short-term max factors. All right. So number one is K Gold. It has a 1.08. We're going to look really quick and see if K Silv would have beat it. It probably would have. K Silv's is no. It does not have as good of a max factor as. Yeah, no, they're okay. Yeah, the two best ones as far as, okay, we'll go back to the list. I'll just make it sure. So K Silv's good. I mean, it did all right, but K Gold would have been number one, even factoring in K Silv and SLJY. Now let's look at what these things are doing. So K Gold's giving 50% of your money back in the form of NAV upside. And, and you're only getting 8% in yield, but I mean, come on, 50%, And then you could also, but then and it's not very stable, but even factoring in the not very stable, SLJY second paying 14.8%, giving you NAV all day long at a 41% NAV upside. And then the GLDI snuck into third place, even though it just had, a 5% NAV upside, because it's also paying 17%, which is higher than the first two. And it has a higher stable dex. It definitely deserves a look at third. Fourth could be a decent fund too. If I was making an editor's choice, well, I would still give it to K Gold or K Silv, but IAUI would be an honorable mention. This thing pays almost 11%. It's got 15%, NAV upside, and it's decently stable. So. Now, Gold Eye is also decently stable, but just gives you too much of your money back in the form of yield relative to what you get back in the form of NAV, even when you factor in the little bit of extra stability you get there. So, all right, guys, well, that's all I got for you tonight. What do you guys want to talk about? Oh, yeah, okay. Now, Miney, I've been requested to make a video on Miney, and I've started working on a script. So what happened with Miney today? Now, it's too young to be in the daily factor, but did it come out? I mean, there was some debate I looked on the page, the YieldMax page last night, and they didn't have the positions yet. But yes, it came out. So let's go take a look at this bad boy. That's a good one. That's a good topic. Thank you for reminding me of that. So let's just go YieldMax Miney Pro, we'll just go YieldMax Miney. All right, so let's just try to eyeball these holdings and see what we have. So the VanEck Rare Earth and Strategic Metals ETF, and of course they don't give us a ticker, and that's one I'm not familiar with. Now these other ones, NuScale. So how is NuScale in a mining? And I guess because the mining business takes power, or does this mean crypto mining? But these other things it means, Pan American Silver Corporation, Constellation Energy Group, Freeport McMoran, Cameco, Wheaton Precious Metals Corporation, and the Uranium Energy Corporation. Anyway, so it looks like the mining infrastructure. I mean, of course, power plays a part in that, as does rare earths, as does lots of stuff. That's interesting. Okay, yeah, no, that one should be interesting. Really, they should have come out that one 6 months ago. So recency bias hurts these managers, or affects the managers, just like it does all of us. You've seen like where a fund will start doing well and people will start, putting all their hopes and dreams in that one fund, and just say, can this go on forever? And of course the answer is it can't. But it's fun while it lasts. But anyway, so these guys, obviously they're chasing the market. They're trying to put out what's popular last quarter. Now, to be fair to them, it takes probably 60, 90 days to get approved by the SEC. Not only that, then they have to back test it and develop that. They probably have a couple of months worth of work in it before that. So that could also explain the lead time. So Bikerman, you're saying Michael Oliver shows gold and silver momentum breaking through decades-long ranges. This is just the beginning. Well, heck yes, I'm all about it. I have 13% of my, it keeps going up. It was like 11%. And, but anyway, it's around 13% now of my high income portfolios is in K Gold and K Silver. And before that, I had a lot of GDXY, and I sold it all at a big profit after the summer rally. I sold it all, and then I put it into K Silver and K Gold as they became available in the fall. I'm really fascinated with the idea of one-to-one upside in these covered call funds. There's not too many that can do it. Of course, it's not perfect. There's drawbacks to it because you get one-to-one downside. But I love the idea of these funds that are giving you at least one-to-one upside, but not really using leverage, by doing things like lightning spreads or being strategic about it, like Howard is doing with K Gold and K Silver. And actually, Howard is using a little bit of leverage, and I'm not talking out of school. He said as much before in an interview. But anyway, very interesting strategies for me. Anyway. All right, so let's take that off there. See, there I am. Hello. Anyway, all right. What else you guys want to talk about? Fish is usually sleeping at this time. Well, I appreciate you getting up. You wanted to buy some of these, but you're above your price range. Yeah. Why don't they split it? I mean, on that, that's GLDI, it's $182. Now they use leverage. This one is levered. And it uses, it's different mechanism than covered calls, but it's been a long time since I looked it up, but yeah, this one is levered, but the price just keeps going up. I mean, but still, even it was still too expensive. A year ago, it was trading at 130, or 2 years ago, it was trading at 130. Now it's great. It's trading at 190, boy, it was a good hedge during COVID, at least the first half of the year when the market was, performing poorly. The NAV of this went from 180 to 200. So you got a good 10%, little 10% buffer. But then of course, as the market recovered, that this one did not perform, and it did not help at all in 2022. In fact, it hurts you just like bonds hurt you in 2022. It was a weird pullback, a very weird pullback. All right, Bikerman, what are you saying here? You're happy with K Silver and K Gold. You sold IAUI to put it into K Gold. Want to capture some upside. I'm also doing some speculation in the junior silver miners. HYMC has been explosive. Let's check out that old HYMC. Heck yeah. Now that's a long-term monthly chart, but I mean, even on the daily, yeah, that's explosive to say the least. You could have bought it September for $5. Anyway, these mining stocks are oftentimes kind of a leveraged play on the infrastructure or the business they're in, and that's why GDXY generally outperforms GLD, especially on the way up, I guess, because it's kind of like And so anyway, this is a good example. And so it says basic materials, but anyway, who knows? They may have a bunch of lithium, uranium, or something. Here it is. Hycroft Mining, one of the best performers on Wednesday, blah, blah, blah. Investors took it to heart from news that it found 55% more gold and silver resources at its mine site in Nevada, bolstering expectations of increased production at the time. when the prices of precious metals are surging. Yeah, obviously. So it's like a leverage play on the asset, of course. Hey, Chad, what is up there? How are things going for you down there in Southeast Texas? I'm down here in, I guess, South Texas. Over here in Hill Country, iGold is 25% of the Max Pi. Oh my God, that Max Pi benefited greatly from having iGold in it. Truth is, I would have put KGold in it had it been available. We used iGold as a backup. Now it's going to be miserable on the way down. I mean, but hopefully we don't go down for a while. Not according to John Oliver anyway, or Michael Oliver, who's saying gold and silver momentum breaking through decades-long ranges. And that's the whole reason you own commodities. Commodities are the kind of things that do terrible for, years and years. I remember in the late 70s, the last time commodities got hot and silver short squeezed. And some of that was also manipulated and stuff, but still, it's also related to inflation and related to global geopolitics and all that kind of good stuff. And nowadays we have the added dimension of, silver being used as an industrial metal and all the, not only in things like lithium and uranium and more like material type stuff is essential. I've heard, I don't know anything about it other than what I've heard in data centers. So yeah, that's the iGold's keeping the Max Pi going, because I'm sure also blocks is in there. Some of my high beta tech stuff is in there too. That's probably hurting us. Unfortunately, sorry about that, but it'll be good next time next time tech goes up, we'll be well positioned. The good in the hood, just making neighbors mad. Guitar Hero Van Halen at max volume. Yeah, I was watching I was playing some guitar today, but not loud. And I was watching a video, and I turned the video way up. This guy plays guitar way better than I do. I'm going to give you his name, and he has a YouTube channel, and he's Jackson. Hang on. Anyway, I really like that guy. Oh my gosh, he's a monster player. Watch, Jackson can walk right back. Jackson, what are you doing? What are you doing? If you go out like that, you can't come back in. I'm going to shut the door, and that'll keep you from going out. But yeah, I was listening to some of his stuff. Little Van Halen 2, man, Van Halen 2. Yeah, I remember when that one came out. Of course, I bought it at the record store. I don't think I got Van Halen 1 when it came out, maybe, after the fact. But Van Halen 2 was right during, right when I was the perfect age for that kind of stuff. Ride my bike to the record store, and in the summertime have to pedal home really quick because you didn't want the record to warp. Oklahoma heat is no joke. It is not to be messed with. All right, so, okay, that's Bitcoin futures. I still want to see if the Bitcoin's moving, the real Bitcoin. So we'll look at Coinbase. It could have been worse. As far as crypto, I'm pulling for this one big because I have all those high beta tech things that are getting killed, like blocks and stuff. But we made a higher low right here. Pretty good one, hopefully. So hopefully this holds. The last time we ran all the way up to 72 or 73. Maybe in the next bull run we can get 77, 78. I don't know. And it wasn't too long ago we hit 100,000. So that was only how fast we forget. That was only January 14th. Anyway, man, that is a big, it's no wonder none of my stuff is doing very well. That's a 40% drop in, darn it. Anyway. Hey, Michael, what are you doing? I need crypto to go back to 120, but yeah, I'll take silver too. We'll take both of them. How about that? Well, I didn't see what CNBC was talking about, but he's saying in the private sector, banks sold off. Well, I didn't see the story, but I mean, I've been watching CNBC for my whole life. They're probably saying that, that the financial sector is the canary in the coal mine. And, there's different things that cause market, the C word. I don't want to say it, but lots of times it could be global geopolitics, and we have a bunch of that going on. But sometimes it's inflation, but more than anything, oftentimes it's illiquidity. And that can be caused by a number of things, leverage and all kinds of stuff. And I bet you that's what they're trying to say. They're saying if banks are seizing up, or the bank, in the private markets, that's it's something is going to happen in the public. It's going to bleed through to the public markets. I would guess that's probably what they're saying without having watched. Now, I'm well prepared for it in my high yield portfolio, because I have all that high beta stuff. I have a tail risk fund called ATTR. Here, I'm going to show that to you guys. And it's like 15% of my overall portfolio. So, ATTR, the Aaron Tactical Tail Risk. I'm in this at like 90 and a quarter or something, and it's at 91. It basically moves up like bonds somehow, or that's what it's designed to do. It's designed to kind of creep up about the same way a bond would in theory do it. And they use box spreads. Box spreads are a way with options to output to extract the yield from a bond. Well, anyway, so but the thing is, somehow, and there's some proven because it's new, but they have 3 or 4 different systems. In addition to the box spreads, they also are using part of the money that the box spreads spit off to do a tail risk hedge. So hopefully we don't need to find out how well it works, but I have about 15% of my portfolio on that. I was going to put it in something called Chaos, but ATTR has Chaos in it. So, and I like ATTR's perspectives. So I chose ATTR. So let me show you what I mean by here. Yeah, see that Chaos right there? It's 60% of their holdings. And these things down here are probably box spreads. That's exactly what they are. They're box spreads. These contracts there. And then in addition to that, I bet these are all box spreads. I bet it's box spreads plus Chaos, but they also have some other stuff in there too. So anyway, I hope it doesn't find out how it works, but that's how I'm positioned right now. And then I also have some YQQQ. And this one, actually, it may not look like it's doing that well. I mean, it's not, but this one actually, and I've had this for a long time, it's because it spits off a yield. They sell covered, instead of covered calls, it's covered puts. So it's a yield generating mechanism that works in reverse. So anyway, and I have some of that, and then I have some of this SLTY, and this is the opposite of an Alti. So this is taking, in theory, and that's not doing a great job, but it's taking all this high beta stuff and doing the same thing, flipping the script and trying to make. Now, it does a good job paying a yield. I mean, it does pay a yield, but the NAV's been a hot mess. But anyway, we'll see. We will see. So you grew up with this music? Oh, me too. You mean, were you talking about that Andy Wood? Or anyway, so you guys go check out Andy Wood. He's he's like an Eric Johnson type guitar player, but he does a lot of teaching. He's a personality. He's a good guy. Anyway, so, I see what you're saying. You saw the Van Halen 2 concert. That's showing your age. There's so much pot smoking going on. You got, a secondary high. So I didn't see the Van Halen 2 tour, but they came through town. They came through Norman to something called, and it was the first one. Let's see. I think it was 1979, called Rocklahoma. And it was incredible. And anyway, Van Halen was came on second to last. The Doobie Brothers were on last. It was Sammy Hagar first, Pat Benatar second. He was singing "I Can't Drive 55." That was his biggest hit, and probably only hit at that time. But in any event, it was incredible because I got to see Eddie Van Halen play Eruption, and that blew my mind to see that live. So yeah, here it is. Yeah, Sam, I'm making sure that I'm fact checking myself. I remember the headliners, but in any event, yeah, it was Hagar. Anyway, it was incredible. It was. I'm trying to find a news story about it. 40 years ago today, September 6, 1980. So I was 14 years old. Yeah, that it was incredible. There are the tickets. I wish I still have my ticket. Anyway. All right. So I'll get back to the market talk here. I'm sorry. I like to reminisce too. You guess it's good that Robinhood's your bank. I mean, anymore, it's basically what it's. I mean, those brokerages are taking over everything. Coinbase, Robinhood. I mean, Robinhood is trying to beat you Tasty Trade and Thinkorswim at their own game. And I haven't tried it out yet, but I heard somebody that was really impressed with it, that knows a lot about options. They have a whole lot of second order derivatives and things that I don't even think you can see in Tasty Trade. So anyway, I probably need to open a Robinhood account. You got to see Skinner live now. Yeah, that the same time, 79, 80, that same time frame, Leonard Skinner came out. I think it was after the plane crash. It was right around the same age. They came out that gold and silver platinum album. I remember riding my bike to the record store to get that. And that was, that was incredible. I think that was, after the plane wreck they had that killed Ronnie Van Zant, Casey Gaines, and Erodi, and who else did it killed both of the Gaineses, didn't it? Or I forget, but it killed Casey Gaines and Ronnie Van Zant. It was so tragic. All right. So Michael, what's your analysis here? You said the banks and airlines are so much and so much more are selling off that you're going mostly in cash. In the way that they talk, it sounds bad for me. Yeah, no, I figured that's what they're saying. I watch enough CNBC that even though I haven't seen that specific one, then we have Tom Lee talking today, and he said he thinks March is going to be bullish. Now, Tom Lee's the ultimate, the ultimate talk his book kind of guy, and he's a permabull, and he's right, probably a little bit more than half the time. I mean, he has a good opinion. He's interesting to listen to, and he's, so you saw the show in Baltimore. So that would have been awesome. So people may not, Oklahoma City, it's not a hotbed for rock and roll, but for whatever reason, I think I've always heard that bands love to play Oklahoma City. It was a smaller stop where the kids are just crazy. I mean, they're crazy everywhere, but I mean, what is going on with the Robinhood stock? Let's take a look at it. I mean, as far as the price guy, I haven't looked at a chart in a while. Let's pull it out. I think Oklahoma City is just a good stoner city that the bands could make a lot of good stoner kids with parents worked in the oil business, lots of disposable income, or disposable income for flyover country anyway. I had tickets to go see the Tusk tour. I was too young to see Fleetwood Mac when they first came out with Rumors or the album before that, but I was obsessed with that kind of California sound, and I love that. I love that, and they were on tour. But anyway, I had tickets, and then I didn't end up getting to go. Something came up. I had to sell to my buddy. I had a chance to go to Led Zeppelin, but I was only 12. They came through Oklahoma City, and I passed it up, and I regret that. But I did see Stevie Ray Vaughan the summer that he died. He died, I think, in September. I saw him in August, and that was incredible. So you got your gold card from Robinhood. Well, that's impressive, Chad. You're selling to pay for those Trump. Yeah, I think they're selling to pay for those Trump. Not financial advice. I hear you. All right. So you saw Reverend Horton Heat before he got popular. Well, I'm trying to think. Before I got popular, I was in Dallas, and I saw. Before they got popular, it was Edie Brickell. She was playing and I walked into a club, and she was playing. Made an impression on me. Also saw Sarah McLachlan before, around the time she was a little Dallas songstress also. And I saw Eric Johnson, but not really before he got famous, but on his first tour. Yeah, That Smell's an incredible song. That's my favorite song off that whole album. I think that's one of my favorite songs, period. I think that is a great rock song. It's classic. I put it up there with Layla. I think Layla may be the greatest rock song ever written. But I really like All Along the Watchtower. Badge by Cream is a classic rock song. There, there's a handful that are classics. But yeah, That Smell is so good. Everything on that album is good though. I mean, what about I Know a Little? I mean, I love the guitar picking on that. Holy cow. There's so many good songs. So many good songs. All right. So I feel like I'm blowing off Michael's questions here, but I want to make sure we cover the market type stuff. But yeah, they're definitely canaries in the coal mine. So Michael, what else? Okay. You're saying could be more selling next week in the way the markets are selling off looks bad, even though GOF pays a nice dividend. That's selling. Well, that's good. Well, I mean, no, it's not good. I didn't mean to say that, but thank you for bringing that up. Let's go look at GOF. The Guggenheim Strategic Opportunities Fund. I mean, the thing is, funds, when risk assets sell off, there's really no place to hide unless you have a tail risk fund, unless you own puts on the index or something, and that's not those bleed, and that's hard to do too. There's not much that performs when risk assets decide they want to sell off. Lately bonds have even been selling off, and like that happened in 2022. They haven't even been providing a hedge. All right, so here we have. Let's get a daily chart out. We aren't trying to day trade a closed-end fund. Well, yeah, I mean, it looks like this is how my portfolio looks. My portfolio, everything was going great until September and October. And then I was up 13% in like 6 months, and I'd had, total return. And of course, I'm not trying to live off it. I'm just dripping. So it's easy. I mean, it's easy when you aren't trying to live off it. I just pick good ones. But yeah, I was up 13%. I'm like, okay, this is easy. By the end of the year, I should be up 25%. Plus I'm getting a yield. If I wanted to live off it, I could draw some of it out. But no, then crypto, the bottom falls out of crypto. Now, luckily, because I had on those inverse funds that I was talking about, I didn't drop as far as I could have. So I'm still up like 4% on the year, but I gave back, from 13 to 4. And I didn't look at today's, so I'm probably more like 3% after today. But as of yesterday, I was up 4%. But yeah, I'm afraid there might be more selling next week. I wouldn't be at all surprised. Let's play some tunes and get DCA'd. Oh, what do you mean? Yeah, I'd love to put on tunes. I could do that because these don't pay anyway. I mean, unless I do a video or unless one of you guys gives me a super chat, all this stuff is basically for free. I mean, maybe I pick up new subscribers and stuff. People think, oh, this guy's a nice guy. But yeah, we could play music and it went, so maybe I would, not make 10 cents or something, but these things don't really bring it in. It's really the original videos. Did you guys see my last original video? I think the point may have been missed on some people. I saw another influencer talking about how blocks. Well, the premise of the tweet was, hey, hedges are expensive. Look, blocks is hedged, and it was on the day that everything was up in crypto. Everything was up like 10%, and blocks is only up 3%. Hedges are expensive. So I got on and I made a video. I said, absolutely, that he's right. Hedges are expensive. And that is the reason blocks underperformed on that day. But then I explained that you have to look at a hedge over a time horizon of longer than a day or even than a week, and anyway, I made a good video, but I thought it was good. It didn't get any views. No one, anyway. And I wasn't trying to be critical of the guy that I kind of halfway agreed with what the guy's saying. yes, hedges are expensive, and that did hurt blocks on that day. But you can look at blocks. You can look at blocks versus anything, and it's killing it. I saw a chart today that SEPI's beating blocks, but other than SEPI, blocks is because the hedges. Because you have to factor in the big up days and the big down days. And there's some big down days where, blocks only drops a third as much as ULTI or something that's unhedged. In any event. All right. So I'll try to show you really quick what I was trying to illustrate, but let's look at blocks for the last, for the past quarter. We're almost to the end of the first quarter. So, but yeah, now SEPI is impressive. I mean, if anyone could ever beat blocks, I mean, you got to give it to SEPI. SEPI is a good one. But you compare blocks with any type of, BTCI, XBTY, pick your poison, that blocks is spanking them. And it's because of the hedges. BTCI doesn't have hedges, or it's because of the active management. So, so in BTCI, it's a good one. That's why I picked it up. That's why I put it first. But, blocks is a machine. Now it still needs the price of the assets that it tracks to go up. That's why it's been underperforming. But I mean, it's, on a relative basis, I'm pretty happy with blocks. Okay. Well, anyway, I figured you guys watched it. Okay, Cornerstone. Let's talk Cornerstone. So a lot of people don't know about this. CRF and CLM. Now, these are very popular. In fact, I'm trying to think of a better way to look at it. I don't want to look at it like that. That doesn't show us anything. Let's look at it like, let's go back and get a long-term price chart. Now, remember I said all that risk assets move together in a crash, especially. It just as good as this was, it was still based on tech stocks. This is Cornerstone total return, but it's more based on tech, where CLM is more based on S&P, and this is more based on NASDAQ. So, but despite that big drop, this thing is a 4-star ranked Morningstar fund and pays a high yield, like it's a covered call fund. Let's go see what the yield is, like 18%. Now, remember, this chart right here doesn't have the 18% every year factored in. So it looks a lot better than this, but this is NAV only. But still, to my point, I mean, the market crashes, you aren't going to be able to hide in Cornerstone or anything. Probably gold and silver would crash with it in bonds, so that's why, but there's one asset that does perform, and it's a tail risk fund, but a tail risk fund has to go out and buy volatility to hedge. All these funds, these high yield funds, what they do is they sell volatility. Selling volatility makes you a little bit of money over and over again in a steady market, where buying volatility makes you lose your ass 99% of the time, but it's the only thing that performs, being long volatility. So doing the opposite of what these covered call funds do is the only thing that I know of that performs in a crash. And anyway, I've made some good content on it before on this theory, but so Robinhood doesn't drip a NAV. That sucks. But yeah, CLM, CRF. I mean, they're some of the highest ranked funds. If you consider what the yield they pay, I know the NAV doesn't look great, but if you add in, it's dropped from 40 to 10. Well, you give it the past 10 years, it's gone from 12 to 8, something like that. So yeah, it's dropped 50%, but okay, 40%, but it's paying an 18% per year, payment. And there's rights offerings. There's other things that are involved that we can't even see on this chart. But I mean, the 18% that it's paying, which isn't guaranteed, that goes up and down too. But let me show you what that does when we factor that in. I wonder if blocks is beating CLM. Probably not. No, blocks is not beating CLM. Now, look at CLM now in but CLM didn't, it didn't really go up this summer when other risk assets were, but and it did get hurt by the crypto sell-off, or actually this was the gold and silver sell-off right here. That was that late January sell-off right there. So he got hurt, but it's bounced back, and it was only down 10%, but I mean, it's as safe as it was, it got hit. So now let's go back over a longer period of time. And you could see Blocks is a bull market fund. It's putting it on during a bull market, but for crypto. But let's forget about Blocks. I know I'm hyper focused on Blocks. Blocks is just a hell of a good fund. I don't care what anyone says. I mean, it meets my, not financial advice, it meets my qualifications. Let's just say that. So let's look at SPY versus CLM. SPY spanks CLM. Oh, I thought, and this is over the past 10 years. Okay. Well, SPY does spank it, well, especially dividends not reinvested. But this thing pays so much dividends reinvested, it's about the same. Well, SPY is still up 300% in 10 years. It's up 250, but it created a yield for you. But this top chart assumes you weren't spending the yield. So that's just like a growth asset. And that's not realistic. The only reason you should have a yield fund is if you need the yield, in my opinion, or at least a portion of it. If not, just buy the asset. We all know that, right? All right. So although there's other advantages to covered call funds into income funds, it also lessens the volatility on the downside. So it's not just that the only reason to do it is for a yield. So there also could be a case made for the volatility dampening effect. I'm not saying these aren't great ideas, but this is what your profit would look like had you been living off the 18%. And that's not too bad, because in 10 years you spent the income, but this is your, but so you don't reinvest dividends, but you're still up from 10,000. You've still almost doubled your money in 10 years, and you've been creating an income for yourself. So that's why it's 4-star rated. It's extremely well managed, and it is a good one. All right. So, okay, Fish, you're dripping with Fidelity, which helps. Heck yes. Heck yes, it does. Bikerman, you want to talk about the Franklin Gold and Precious Metals, started in the 60s, has the majors been doing better than GDX? Okay, I never heard of that one. It's probably a mutual fund. We don't cover that much, but I mean, when I was a broker, I used to sell Franklin stuff, American funds, Franklin Templeton was different than Franklin, but anyway, so let's just slap this in here. So FKRCX. Well, let's just go Franklin. Let's just see what they have. Did I misspell Frank? Yeah, I misspelled Franklin. All right, so let's see how close we can get to it. Show all results. They're usually, even if it's a mutual fund and we can't look at it, they'll have an ETF that's close. But the fund itself is probably been out since the 50s. That's amazing. So what is the prefix? FKRC. Let's see if there's anything that's even close to that. Look at this, responsibly sourced gold ETF. So this is the gold that doesn't pay for slave labor, I guess, or whatever. So I bet it doesn't do as well as the other one. But anyway, it's good to have a conscience as well, though. It's not all about the pluses and minuses. Yeah, but this is an old company that's been around forever. CLM made you positive for the day. That's awesome. Yeah, I mean, I have enough K-Gold and K-Silv and enough inverses, and some other stuff that I'm not sure I was down, but I do have like 11% in Blocks and 14% in K-Yield or something like that. Those are my two big positions, and they didn't do that well today. And then I also have some QLDY, which I really like, but it doesn't do well when the NASDAQ's down. And then I have some ULTY, not as much as I used to. And that one actually has been doing really well lately compared to those other ones. It's been outperforming. But yeah, so I'm pretty sure I got hit today, even with the gold and silver being up. Somebody in my Discord says they have like 30 or 40% in gold and silver. Man, I wish if I had 30 or 40% of my high yield portfolio in gold and silver, holy cow, I'd be up 30% now or something. Okay, you saw your closed-end fund, my closed-end fund video, and you saw a fund that caught your eye. Well, and I'm adding new stuff to that all the time, but tell me what it was and we'll take a look at it. Oh, so which one has the 1 million minimum bonds talking? Oh, the Franklin one, the Franklin Metals one maybe is the one Bikeman's talking about? Loaded, waived, and no transaction fee through the Fidelity. You could just buy GDX. It said, yeah. So when I used to sell mutual funds and stuff, yeah, it didn't matter if it's it was a big deal in the late 90s, a no load mutual fund, meaning it didn't have an upfront fee, but we actually like to sell those more. I mean, or it didn't really matter. It didn't really matter. There's no way to get around when you're paying somebody to do a financial transaction. The banker's going to take his cut. You know, and I wasn't the banker. I was just a little peon in the business, but then I would get my little tiny slice of the pie. So, oh, BCAT. Okay, yeah, let's look at BCAT. All right, yeah, now BCAT, now that's the BlackRock Capital Allocation Trust. So I'm picturing like an infrastructure type fund. I've looked it up before. I've been on the website. Let's just pull it up before I read their investment approach. Now let me get my darn picture off the darn screen there since we're showing off the screen. Let me take Fish's comment down. Okay, investment approach. Let me try to zoom it in case you guys want to read along with me. Of course, the zoom only works when I don't want it to, and it doesn't work when I do want it to. All right, well, the investment objectives are total return and income through a combination of current income, current gains, and long-term capital appreciation. So sounds like a good portfolio. That's the elements of any good portfolio. So a little current income, current gains, and then a lot of long-term capital appreciation. Anyway, the trust invests in a portfolio of equity and debt securities. Generally, the trust portfolio will include stocks and bonds, in other words, or corporate bonds. So stocks and corporate bonds. At any given time, the trust may emphasize either debt securities or equity securities, and the trust writes options. I like that. I didn't realize that. Not all of these do, but the trust also writes options to add to their current gains. So BCAT has a 12-year limited term, subject to extension with contingent features, convert to perpetual. Anyway, that's just. So this thing has $1.5 billion. Let's go look at old BCAT. Well, you can sure see the payments coming out, right? I mean, because the day after deck day or the day of deck day, there's a huge dip. That's, of course, the dividend coming out right there. Boom, boom. And it goes back up. Same thing happens again. Now let's go look at it over a weekly time frame and then over a monthly time frame. So this thing got hit. Remember, it's stocks and bonds, and it got hit in 2022. Neither of them worked. There's hedge funds and stuff that went out of business in 2022. That stuff that used to work didn't work anymore. The 60-40 portfolio broke, or 2022 broke it. I've heard somewhere that bonds, Mike Coe told me, and he's like a professor of finance. I mean, he has a vast, vast knowledge and stuff. He said that from the 2021 peak to now, bonds have lost 80% of their value or something. But anyway, we're looking at it. Looks more dropped from 170 to 90. They bled off 50% of their value. I mean, you get income off them, but I mean, it's just like a covered call. The asset that it tracks still has to appreciate. The asset that these track has not been appreciated. It's been getting murdered. So yeah, you still get an income, but in the old, it's supposed to be a hedge. How it worked in 2020 is how it was supposed to work. That's how it worked in the old days. Whenever market sold off to be a flight of safety to bonds, we could see the same thing in 2009. So that's what the 60-40 portfolio is built on. 60, but that equation's only been working like 50 years. And if you look at the average age of the average advisor, he's 50 years old, and that's all people like me know is 60-40 portfolio. That's all my, reflexively, they get stock and they get bonds, 60-40, and then you're covered. Well, the 60-40 got murdered in 2022. But this makes the case for alternatives. Alternatives meaning things like covered call strategies, but not just them. Tail risk funds, auto callables, the more exotic kind of things that are coming out nowadays. That are theme based also. I think that's what it's about. So yeah, there's a BCAT and there's an ECAT. Now ECAT's too woke for me. I'm surprised you have it down there, Chad, because I know you're a Texan and a patriot. ECAT says some kind of ESG trust. And anyway, just anything that has initials, that corporate initial stuff, and DEI, ESG. I'm just joking. ESG is good. It's good to be conscious about the environment and stuff. But yeah, I believe one of them I believe it's the same theory, but one of them is ESG approved. Because there's some people that won't invest in a company doesn't believe in good environment, good social, whatever. But then a lot of that is you guys, or as kind of my opinion, a lot of that's kind of just, PR and kind of just to make people feel good. So, but in any event, I believe it's roughly the same fund with just I bet you BCAT does better because I'm just super cynical. The one that can cheat, or not cheat, but the one that doesn't have to be good, the one that doesn't have to behave. But let's see if that's right. Let's just run BCAT versus ECAT. No, see, it pays. It pays to care about the environment. Now, this is only since 2021 these have been out, but look, even as good as these are, you lost 25%, 30%, more than 25% of your money like that. I mean, so be cautious. So you remember 20 years ago, Schwab would charge you $75 for purchasing. Yeah. Oh yeah. No, I know it. I remember that too. Yeah. When I was a broker, if even I had a friend that called and even if I gave my commission away for free, my company charged me some kind of minimum, and it was, I forget what it was. It's super high dollar. So even if my sister called to sell 10 options on Eli Lilly, which she did occasionally, and my brother-in-law, my firm made me mark. It was just ridiculous what we used to get away with. And so I'd do it for nothing. But my firm would charge a minimum. So, and that's the way it works. Like I say, the banker always gets paid. Nice guys finish last. That's what they say. And you know me, I didn't want to charge my sis, but which stock or ETF have you held the longest? Well, I don't even know. Probably Vanguard. I mean, in my growth portfolio, or Eli Lilly. Okay, there may have been another difference too, Chad, but I mean, I swear it's in the name. ECAT is the ESG capital, the BlackRock ESG capital allocation trust. The price action looks the same. They look like the same. So I've always just assumed that the ESG was the only difference. I mean, I really haven't been that interested to dive into it. I mean, I try to specialize in the covered call. There's enough covered call strategies and funds out there. I don't feel like I have to know about closed-end funds also. It is cool that the closed-end funds also sell covered calls, but they do a lot of other stuff. Like BCAT does a lot of other stuff besides selling covered calls. So I'm not opposed to learning about it or whatever. But yeah, that's and I know ESG is not the same thing as DEI, but all of those initial things that were put out there to make people, maybe are good ideas on paper, great ideas. I mean, great idea on paper, but also then at the end of the day, it's really, ACVs on your list. Let's check out some ACV. Well, I mean, the Virtus Diversified Income and Convertible Fund. Heck, what the heck is this? All right, so this gets a seat in the factor. Now the factor's expanding soon, but who knows when that'll happen. So was it ACG? I've already forgot. And plus I need to capitalize it. ACV. I'm sorry. I'm sorry. Heck yeah. Heck yeah. We'll load it on up here. After hours, sometimes it loads data slow. But yeah, it looks good to me. Virtus has another one, or probably lots of them, that's doing really well right now. I forget the ticker on it, but okay. Investment objective. This fund seeks to provide total return through a combination of current income and capital appreciation. So that sounds kind of like a covered call fund, while seeking to mitigate the risk of capital loss. So no, that doesn't sound like a covered call fund, other than maybe like a ULTY that keeps a perpetual hedge on, is basically trying to do a mix of current income, capital appreciation, and prevent. That's why I like that fund so much. I mean, the downside is where that one really pays off. Anyway, the fund strives to dynamically allocate across convertibles, equities, and income-producing securities. I wonder if they do any covered calls. Attempts to dampen volatility relative to an equity-only portfolio due to the asymmetric risk-return feature historically exhibited by convertibles. Yeah. Nice. There's a Virtus one that I know about that's just killing it lately. I mean, here's their whole list. Maybe I'll recognize it. I swear there's another Virtus one on our list. It may be an ETF though. AMZA, have you guys heard about that one? I mean, MLPs have been hot. That's a REIT, it looks like. VDI, I wonder if that's the one I was thinking of, but no, I don't think it is. But there's one of these that's on the factor that people talk about all the time. You hear about PFFA occasionally. Virtus REIT. Yeah. Well, there's a Reeves utility, but it's not that one. Huh. I don't know. You didn't know what ESG meant. It's good. So it's environment, social, and governance. So what it means is it means you can't just have your board just full of wealthy white guys that are your friends from the country club. This is what I think it means. So you have to have some diversity on your board, and then governance. I don't know what that means, and environment probably, like I say, I mean, all those things are great. I mean, there's nothing wrong with diversity, nothing wrong with environment and being environmentally cautious, and all that stuff's a good idea. But it's like anything else in society, it just gets misused, and we can't land in the middle on anything as a country. We either go to one extreme or the other. So, 15 years ago, that's all anyone talked about is DEI and ESG. And if you weren't that, your company was no good and was dead. And, and so all the companies would put out like Apple, you buy something from them or records, CDs, they're always made on recycled material. It always says produced on recycled, which is good. There's nothing wrong with that. But then I think it just got abused and it turned into kind of being a kind of a show off thing. Anyway, I wasn't trying to get you to sell out of that, but to my point, you could get some BCAT with it and it looks like it's roughly the same fund, ICAP and yes, that's what it was. It's PFFA. And I said that when I passed by, I said, you hear people talk about that occasionally. And that was my mind trying to think. What do I know about? Yeah, you're right. Okay, so that's a monthly chart, which isn't bad for a monthly chart. Now you see 2020 hit it. I mean, it lost 60% of its value at one point. If you had it on margin, you probably got a margin call. I mean, or, depending on what else. You may have got a margin call anyway in 2020. I mean, 2020 was miserable, but it did bounce back fast. So yeah, so it's just, this looks like a private equity. So it's InfraCap US preferred stock. So yeah, you have KKR, that's the biggest private equity firm, I think, in the world, but I don't know, Apollo maybe. I mean, these are some good blue chip names you hear about all the time. Global Net Leasing. ET's a good one. Yeah. That I know a lot of people have done well on that one. TDS. Now, TDS, I thought that's what I had, Trump derangement syndrome. I'm just joking. I like Trump. But anyway, my friends tell me I have that. What do they know, right? Anyway. All right. So what do I think about PD that climb all? Okay, well, let's go look at PD. I saw you ask about that last night, Michael, or mention it. PagerDuty, that's right. So, and I thought, but it looks like it dropped all day today. Did it? I mean, what am I missing? Oh, well, let's see here, daily. Okay, no. Yeah, yeah. And that's why you mentioned yesterday, because it's blown up from 6, and then the next day it was at nearly 7. Then the next day it was at 6, at 7, and yeah, heck yeah. No, that one's hot. That one's hot. Was it earnings related, or I mean, here the last time earnings came out, people didn't like it. People didn't like that earnings either. They looks like they did a reverse split there. So I bet they have. So I bet it has a lot of decay. Well, that's the long-term chart. Okay, 2020. I mean, this thing may take the cake as far as the 2020 pullback. I mean, from high to low, this thing looks like it lost about 70% of its value. It snapped right back though, but the 2022 performance on this was no bueno either. It started to bounce back with the market in 2023, but then sold off again. I mean, it's definitely a deep value stock. I mean, it's, it's down 84% on a 5-year basis. So BCAT for the win. I didn't mean to talk bad about ECAT. Like I say, I'm for all of those, everything in those letters, I'm for separately. But as a group, I think they get abused or misused, let's just say. But of course, we're all, I mean, I know we all are for that. We all want good stuff to happen for the world. So, but yeah, but sometimes making good stuff happening for the world and investing, or sometimes at cross purposes. So I guess at some point you have to depend if you're a capitalist or a idealist, let's say. Anyway, LGI. That R stands for, oh, I'm sorry, my bad. Let me go back to PagerDuty. I just figured it was reverse split. My bad. Let's go back actually and read that. My bad. So ratings. So RBC, it got downgraded from outperformed the sector. Okay, my bad. And then right here, right after earnings, it looks like somebody else downgraded it. I mean, if these guys were any good, they should have downgraded it back here, right? I mean, before it dropped, I'm just joking. But that goes to show no one knows anything. I mean, I just don't pay attention to what anyone says about anything, especially when they're trying to tell you which way the stock's going to go. No one really knows. It's lots of times it's a manager and he's talking his own book, and not that he's necessarily lying, but he probably needs everything to go just right for what he's saying, to come true. But I just believe in the theory, the random walk down Wall Street. I think maybe over the extreme short periods of time, like a day, a week and stuff, people can predict short-term market movements, but over any longer period of time than that, I think it's really, more random. All right. Yeah, Seattle's going to save the world. Exactly. Or I was thinking, Silicon Valley, but yeah, no, you're right. Michael says CNBC saying the software sell-off because of IGV was down, that software should be down. Yeah. LGI is off the list, near all-time highs. Yeah. No, I got you. A lot. Virtue signaling is the word I was looking for. And like I say, but not against the things individually. But yeah, it's like our corporation is more righteous than yours. I mean, in the South, we do it too. We do it. Our church, our religion's more righteous than yours, or whatever. I mean, we have our own little things, but yeah, in Seattle and Silicon Valley, the corporations have become a monoliths, and yeah, they're involved in all that kind of stuff. It's funny to watch how they all change as the political winds change. I mean, you can't tell. Bezos and Zuckerberg aren't really Trumpers. They switch to be Trumpers whenever it was politically convenient. Those guys are liberals. I know a liberal when I see one. They're liberals. I mean, anyway, but you know, you have to go which way the wind's blowing. So they switched around, and now Zuckerberg's all, you know, it is he'll go back to being a liberal the second of you know, Democrat gets reelected. So anyway. Yeah, TD crash outs are pure comedy. They are epic. No, that's a good question. Did we ever go to Fort Knox and see if gold was there? I don't believe we did. Yeah, AI generator. Maybe it's just BS. I mean, when you have the Army guard something, I mean, who's going to get in to check it? If you're in control of the guys that guard it, you know. So everyone Seattle drove a Tesla before the 2020. Yes, well, and everyone in Austin drives a Tesla before and after. Austin's a good mix. There's a lot of conservatives here because of the oil business, and but there's also a lot of Californians that have moved here. But lots of the Californians that have moved here were kind of the rebels, and that's why they're here in Hill Country. So Austin fits my personality perfect because I'm not really. I just you know, I'm on an issue by issue thing. I'm not I'm not like a zealot, you know. I don't wear, you know, I don't have underwear that have the elephant on it or that say MAGA or something. I mean, whenever one side has a better idea, you know, and sometimes if another side has a better idea, I'll just listen to the argument. Anyway, Austin's a really good town. We have people like Alex Jones. Then we have a lot of people like me, and then we have a lot of Californians that got exiled from California. So, but yeah, and then of course, because it's not, people think Austin's liberal, it's because universities here. Universities are generally liberal. Now, UT is less liberal than other universities, but when you have a university and a state government here, that just kind of, you know, is a big factor in the politics. What are my thoughts on property tax in Texas? Too much or justified? Well, I know I've never had to pay them in Texas because I've been a renter down here, but I've heard they're obscene. But I used to pay them in Oklahoma, and they were 1%, and houses were cheap, so it wasn't that big of a deal. But I'll say this generally: I mean, generally places that have higher properties taxes have higher standards of living, better schools. I'm willing to pay the extra. I mean, it's, you know, now sure there's lots of abuse and stuff, but I mean, I don't want to live somewhere. I don't want to live in a town where, you know, that no one puts any monies into the school or in an area. You know, Austin's a highly educated area, and where I grew up in Norman, Oklahoma, that's especially my side of town. Everyone has a college degree and, you know, owns a business or something. So taxes are kind of, I mean, you don't want to pay too much taxes. So with Texas, though, the difference is you don't have the state income tax, but I want schools to be good. I mean, you want kids to be educated, even if you're older and your kids are out of school, all right. Mine dropped for this year. Some red, I'm locking in. Well, yeah, I need to wear American flag underwear, and I do have I have a towel that has the American flag, and I do. Absolutely. Yours dropped for this year. Did you have to burn it? Or is that what you mean? Did it touch the ground? I wouldn't have known that if you didn't bring it up. My point is I'm open-minded, and that's the way a lot of people in Austin are. That's the way I was raised. You know, my parents grew up in the 60s, and I was just always raised to be, I was always raised to be well educated. Now, I've been a big disappointment to my parents because, especially my mom, because I grew up to be a pretty, you know, much a Reagan conservative. So, but yeah, hey, Jackson, hang on. Let me let him out. All right, he'll be barking in a second. Anyway, yeah, no, I know it. I know it. I'm just saying in general. So, you know, when you live in better places, the places I want to live are Austin, Dallas, something like that, Southern California, West Palm, somewhere in you know, or up in Virginia and through Maryland. I like to live in the nicer areas. Those areas usually have higher taxes. If it's not state tax, they'll get you on property tax like they do in Florida. It's just what it's the cost of doing business. So yeah, they do say keep Austin weird, correct. And I think Alex Jones is a good. We have guys like Alex Jones, a lot of them, and then we have people that are just as liberal as as Whoopi Goldberg or whatever. So yeah, it's a crazy town. All right, guys, well, I'm getting tired of talking. Plus, I haven't had dinner yet. I'm going to go get something to eat. Appreciate you guys being here. I like all the good stock tips we talked about. PagerDuty may be the turnaround stock of the year, and if it is, we're going to say that Michael told us about it, and he's been telling us about it for. You've been talking about it for a couple of weeks, right? But you've been right on this one. I mean, it's going the right direction. It is going the right direction. Okay, so the cities in Texas are 2%. Okay, so that's crazy. I get that that's high, but I mean, I'm not going to move to the country to save the percent. I mean, if I want to live in Texas, I want to live in Austin, Houston, or Dallas. I mean, or probably Austin or Dallas. But anyway, Fort Worth would be cool too. The Bears are getting closer to moving to Indiana. Yeah. Surprised they haven't already. I mean, so, and that is why you like watching Max's channel. Oh, because I talk about the CFs. Well, in my Discord, guys shamed me into doing it. I didn't want to include closed-end funds, and because I wanted the Max Factor to be about covered calls. But then as I learned more about them, and I understand that they sell options too. A lot of them pay monthly, so it's the same difference basically. So yeah, I'm learning about it myself. Yeah, and I like that. That's what I'm here for. I'm here for the Hangouts too. I'm telling you guys, these lives don't make any money, but I'm not. Luckily, I'm not trying to make money. I'm trying, like I was telling people, I'm trying to make friends, not money. But I do think you can make friends and money at the same time. And when I get my act together, and as I produce better content, my views will go up. If I want to keep producing kind of half-assed content, my views will stay where they are. Whatever. I'm good in either event, right? Yeah. Oh, the people on the Packers. I know it. Isn't that crazy? What an awesome business model. Now, the other side of that though is isn't that the smallest television market in the NFL is Green Bay? And really, if it wasn't for the town taking an ownership, they would have never, by now with cable and stuff, they probably would have got a franchise, especially, but that franchise has been around forever. So the people on the Jets, I was not aware of that. So people on Long Island are actually investors in the Jets, or is the Jets part of, because the Jets is Long Island, right? It's the Meadowlands, and the Meadowlands is probably funded by bonds and I was going to say municipal bonds, and also probably maybe property tax and maybe even sales tax or something. Jets need to move to San Antonio. Heck yeah. Well, you couldn't get a better environment for football than Texas. This is where all the athletes they recruit are from. They all come from Dallas, the suburbs of Houston, or west here of Austin. I mean, you can look at the NFL quarterbacks that grew up here in Hill Country, and Drew Brees is the most famous one, but there's 10 other ones that had big college careers. And, Baker Mayfield grew up in Hill Country. Brian Bosworth, not a quarterback, grew up in Hill Country. But anyway, yeah, this is breeding ground for athletes at the college level. But I think that's part of the thing that holds the pro guys back, is they aren't sure, a pro team can make it here. And really, Houston's team isn't really much to speak about, really. I mean, I used to love I used to love the Oilers, of course, Bum Phillips, when they had Earl Campbell. And I mean, they were all Kenny the Snake Stabler at quarterback. Hell yeah, I was all about it. But yeah, I don't know. It'd be cool. I don't know if Texas could even with all the college prospects here. I don't know if we could take a third team. I'd rather be in Austin than San Antonio. Maybe not though, for the traffic and stuff. But I mean. Well, I appreciate the compliment, Fish. If you build it, they will come. That's right. That is right. Like I say, I'm in the lucky position of not needing the income, but but I'm competitive. Let's just say that. All right, guys. Well, I'm going to get out of here. I'm going to go get something to eat. Okay, I'm not saying the Texans, yeah, they had a good year this year, whatever, but you know what I'm saying? Has that been if you looked at the value of NFL franchises, Dallas obviously has been tremendous. But I don't know that Houston's franchise has created a big value for the investors. And even though they have all the, half the NFL linemen are from West Houston, they've all went to Katy or Cypress, Fairbanks, Katy. There's 5 high schools in Katy, and whichever ones didn't come from there, they went to South Lake in Dallas, South Lake Carroll, or they're from Hill Country. I mean, that's a lot of the talent around here. But I think the pro teams think it's hard to compete because we have Friday night lights and then we have Saturday night lights. And I just think the pro teams find it hard to compete. Houston Texans is like saying, yeah, NYC New Yorkers. The Oilers was the perfect name because that's an energy city. The Oilers would be perfect. It'd be like if there's a team from Austin, you'd have to name them the Austin Weirdos, right? Or the Austin Liberals, or I'm just joking. But no, Houston, I mean, the Oilers is a great name. That was a great franchise. It was a great stadium. The Astrodome. I mean, Bum Phillips. I used to love, I always liked the Oilers more than the Cowboys because I like to root for the underdog sometimes. And I really liked Earl Campbell, and I really liked Kenny the Snake Stabler, and I really liked Bum Phillips. Yeah, Katy has 10 high schools. Yeah, something like that. I mean, and then Cypress, Texas is basically West Houston, but I mean, that thing's like you hear about Frisco. You have Frisco in Dallas, which is just Dallas, but it's called Frisco, and it goes on for miles and has 100 high schools. Lots of, and lots of people with good jobs. It's just, I think that Cypress and Katy are kind of the same thing. Here in Austin, we have a place called Westlake, and it's still Austin, but it's the more upscale part of town where more of the athletes live. And in Dallas, they have South Lake Carroll. Yeah, they do need to bring the Oilers back. Now, I wasn't talking trash on the Texans, but I'm just saying I don't know that that's been a great financial windfall yet. I could be wrong, but don't they already need a new stadium? The stadium, they kind of underbuilt the stadium. I remember when they rolled out 2003, I think. I was working in Texas at the time, and I knew people that went to the first game, and it was a big deal. I mean, it was a big deal. Yeah, heck, Warren Moon, absolutely. I forgot about him. I was always a Kenny Stabler guy. He's the kind of guy that had long hair and, smoked cigarettes on the sideline, cuss. And I mean, athletes were different back then. Kenny the Snake Stabler was a man amongst man. The Pflugerville Jets. Yeah. But I would be all about bringing the Austin Hippies. Yeah. Keep Austin weird. You could even call the Austin Weirdos, really. If it was a minor league franchise all day long, the Austin Weirdos would be great for marketing. I mean, because keep Austin weird. I mean, maybe that's more like 10 years ago. With all the tech people moved in from California, and it's not as weird as it used to be. We have a bunch of people here that are, driving Audis and Teslas and are more worried about, worried about their stock options more than anything else. They don't care about anything else. Stabler was on the Raiders, but in later life, he played a year or two for the Oilers. I promise. I saw a thing the other day. They put in, and plus I remember it. Of course, when he was in his prime, he's on the Raiders, and the Raiders are even another story. But he played later in his career. And the only reason I know this because you get back in Oklahoma, you get 2 teams. You get the Texas game and you get the Houston game. And then you might get a Kansas City game. It depends, or St. Louis. I mean, that you get kind of regional games back when you didn't have before DirecTV. Chad, moving out to Bridgeland. Apparently, they rent space next to the. Okay, so that's where the team is moving to Bridgeland. I don't even know where Bridgeland is, but I'm going to look it up because I'm obsessed with where things are. Bridgeland, Texas, suburbs and stuff like that. Oh, that'd be a great place for it, right in the middle of Cyprus. I mean, so you're saying that's where their practice facility is? I mean, I've heard that this Spring, Texas is cool. I've never been there, but I've heard that's a cool place. Some good barbecue and stuff like that. When I was in rehab, there was a hot girl that was from Jersey Village, Brittany. Oh my gosh. She was a little hottie. Yeah, they do need to fix that. Yeah, bring back the Astrodome also. You guys know the Astrodome had a 6-story penthouse in it where the guy that owned the Colt 45s, the initial investor, and I forget his name, but he was an oil man, of course. But anyway, he had like a 70s palace in that thing, and he could sit there and watch the game. He was at the game all the time, all summer long. He got to see the Astros, and all fall long he got to see the Oilers. That'd been quite the life. All right, guys, I'm gonna get out of here. I appreciate y'all for being here. Let me read my disclaimer. All right, do you know her? I think Chad's dated her. Chad knows her. Yeah, he's like, oh, Brittany, yeah, hell yeah. I promise, Chad, you would have liked her. I promise. All right, let's read the disclaimer. All right, where is the disclaimer? All right, guys, remember, not financial advice. Consult a professional advisor. If you care to support the channel, you can always do that at paypal.me/Max Convexity. Outside of that, you can always hit like and subscribe, and all of that's well appreciated. So Chad's known a few. Absolutely. Absolutely. I think we all have. Not me though, because I'm older. So I never had any friends who were named Brittany growing up. Brittany didn't really become a thing until Britney Spears that I know about. All my girlfriends growing up in the 70s were named Stacy and Tracy and Amy and those types of names. But yeah. All right, guys. Well, thank you guys so much for being here. I appreciate each and every one of you guys, and I will talk to you guys soon. See ya.